What's up guys, it's Justin. In today's video, we're going to be talking about the stock market or the real estate market. Which one should you invest in? I'm going to talk about the pros and cons of each one, and then I'm going to tell you what you should do if you have the money in the reserves for long-term gain and short-term gain. So keep watching. As you guys know, in real estate, if you have ever gone to go look home shopping or anything like that in the past couple months, then you know that right now there are not a lot of homes that are available. So what happens is when inventory is so low, it becomes seller's market. So what happens in the seller's market is that sellers get to control what the price is. So as you guys can see, low inventory, higher prices. So sellers are making a lot of profit, but buyers are having to overpay for properties and probably have to bid with other people to get a home. So what's happening in the real estate market is crazy, and it's very hard for people to buy homes, which is why right now investing in real estate is a little tough. But let's talk about the stock market. Recently, as you guys know, with this GameStop and all this etc. stuff going on, the stock market is doing pretty good. The Dow has gone down 400 points but goes up 200 points. It's very, a little bit crazy these days with what's going to happen with GameStop, BlackBerry, AMC, all this stuff that's going on is driving stock prices up and down, and it's just a very volatile space right now. But if you know what you're doing, it's good that you're investing in stocks, and if you're looking for long-term gain and more of dividend stocks that are more safe, it's always a good bet to do stocks. With that being said, let's talk about the real estate pro. As you guys know, I am a realtor in Georgia, so I know a lot about real estate, and so let's go on to the first thing of pro of investing in real estate, which is it's less volatile. I mean, real estate as a long-term gain always goes up. It's not like stocks where
one day the prices shoot up and then the next day it shoots down and after 30 minutes it shoots up.
It's nothing like that in real estate. Real estate is very stable, and usually as an average percentage of growth, you're looking at about 7% annually, which means that every single year real estate goes up 7% annually. If you guys know or remember, 10 years ago, home prices average price was probably in the 150, this is in the thousands, and right now the median home prices are $250,000. So as you guys can see, that is a big jump, and even though the economy might not be doing good, real estate always increases because there's always a need for people to live.
And so unless everyone disappears in the world or everyone leaves,
real estate will just go up continuously, annually, more safely and more not so volatile like the stock market. Another pro about real estate is that you get a touchable, tangible object where you can live in it, you can rent in it, you can sleep in it, you can do whatever you please in it because it's your own property. What's so great about that is, unlike stocks where you can't touch it and it's in the cloud in the service,
or in the cloud service, or in the air, or wherever it is, or at the stock market, I don't know, in the internet, in the gamma rays, I don't know what it's called.
But with real estate, it's land and your property. You get to touch it, you get to feel it, you get to repaint it, you get to fix it up, you get to do so many things with real estate that you can't do with stocks. Another pro about investing in real estate that a lot of people get in for this reason is because of the tax advantages and the deductions you can make with tax. There's something called 1031 exchange, where when you buy a property and you created capital gains value, so when you sell you made profit, if you invest that money into a bigger investment in the same portfolio, so let's say a single family to a single family, then you don't have to pay any taxes on your capital gains. This is great because as you increase your portfolio and you increase your wealth and your money, you're gonna want bigger properties so you can make more cash flow. With that being said, the more money you put down into the next property and next property, you don't have to pay any taxes on the gains you make. For example, let's say you bought a $100,000 home and you fixed it up, you some rehab, and it's now worth $150,000. You go sell the property and you made $150,000. That means you made a profit of $50,000. Usually, if you take that money and you put it into your personal account, they're gonna ask for capital gains tax, where you're gonna have to pay a tax for the $50,000 profit you made. But with 1031 exchange, if you put that $50,000 back into investing in real estate and buy a bigger property and you don't take any of that money out, then you're going to not have to pay taxes and you're gonna make a bigger cash flow on that property because you bought a better property. So with that, there's a lot of people who get started into real estate investing because they don't want to pay taxes to the government, and this is a great way where they can deduct a lot of their taxes. Another pro about real estate is that you know what the value of the home is going to be. There's something called comps, where you can see comparables of your same home and see what the values of recently sold are for each individual home near your home. So you always know what the value of your home is, or you can sort of value the estimate of your home value. And also, you can always appreciate your value of your property. You can look at sold comps for maybe, if you have a 3-bedroom, 2-bath, you can look at a 4-bedroom, 2-bath and see how much an extra bedroom is for your home. That's a great way where you can appreciate value in your home and know that you're going to make a return on your investment. And also, I can't end this without talking about cash flow. With real estate, you will make good cash flow and you know exactly how much cash flow you make. Unlike stocks, where if you buy dividend stock, the company will give you dividends per yearly or annually or bi-quarterly by how much gains they've made. With real estate, you always know how much you're gonna make. If you rent out a home for $1,000, then you know you're gonna make $1,000 unless your tenant disappears or leaves. But you know you're always gonna make $1,000 and you know it's gonna be consistent up to that year or whatever that lease term is. That's a great pro of why people get started in real estate, because they wanna make cash flow without, having to worry about the economy or this and that.
Unless, of course, there's a war zone and obviously the next door neighbor blows up and something happens.
But usually it's a safe bet of good cash flow. Now, real estate is not always good, and so let's talk about the cons of real estate. The biggest con that I can think of is the requirement of capital. Real estate is not a cheap game to play. You can't just invest $10 and get into the real estate market. That's just not how it works. You're gonna look at probably 20% minimum to get in. Now, if you're going to live in a property and rent out the other unit or something like that, you can get away with an FHA loan, which is 3.5% down, or maybe if you're a veteran, you can get a VA loan and get 0% down and rent it out next door or something like that. But usually you're gonna be looking at 20% more if you're investing in a property where you're not going to live in. That is a lot of capital that you're going to have to invest in. As I said, median prices of homes are $250,000 minimum. So let's say you buy a property for $100,000. 20% of $100,000 is $20,000. That's a big capital where a lot of people don't have $20,000 saved in their accounts to go put a down payment and risk that $20,000. Like I said, it requires a lot of big capital, and if you don't have the capital, it might be hard to get started in the real estate game. Another con about real estate is it's just hard to get in general if you don't have a job and not a stable, consistent job. When you go get a loan, obviously if you're only putting 20% down, you're gonna have to get an 80% loan. Now, when you go get a loan, it is very hard to get qualified these days because they're gonna be looking at your income statement. They're gonna be seeing your debt, your monthly debt and your credit score. There's a lot of factors that go in with getting a loan for real estate. And so if you don't have a job for 2 years, you're probably not gonna be able to invest in real estate by yourself, and it's just hard with a bad credit score. They're not going to qualify you for a big enough loan and stuff like that, it gets a little tricky and hard because, like I said, if the median home price is $250,000 and you don't get qualified for $250,000, it might be hard, but that means that you can put a bigger down payment if you have the means. But they're also gonna look at where you got your money, where has your money come from. It can't be cash that you just deposit all of a sudden. It's gotta have a stream of transactions of where that money came from. So they do track a lot of your income and all your statements to see everything matches up with your income level. And the last con that I wanna talk about is that it's very hard to sell real estate. What I mean by this is stocks in general, you have the option to sell and buy immediately. But with real estate, you cannot just sell a property immediately. A property is worth its value, but without a buyer that's willing to give you the money, it's worth nothing until that transaction happens. So it's gonna take some time for you to sell. It's not something that will be done instantly. You're gonna have to, list it with a real estate agent, wait until you find a buyer, and then have the buyer get processed with the loan process and everything, credit, check and everything. And if everything comes out good and clean, then you get to make your profit. So it takes more time to sell something and to buy real estate than something like stocks. All right, now let's talk about stocks. The first pro that I'm going to tell you guys is that it's more liquidable assets. Now what I mean by this is it's instant. You get to put your money in, and whenever you want your money out, you can take your money out. I think of it as a savings account because whenever you want to sell something, you can always take your money out regardless of what's going on in the market. With stocks, it's just liquid assets that you have right under your fingertips. It's just instant access to your money. Another pro about stocks is that you have no legwork involved. Now, what I mean by this is in real estate, when you go buy a property, you have legwork. You've got to research, right? Well, stocks, you've got to research, but in general, you've got to research. Then you got to go to the property, look at the property, sign contracts. You got to make sure you're going to get the rent that you think you're going to get. There's a lot of things involved, a lot of legwork in the beginning process of real estate. There's a lot of legwork involved of going to the property, making sure the property is good, and there's nothing wrong with your property. But with stocks, it's immediately, and you get to see instantly the value every single second of what the price of the stock is. It might go up 10 cents, might go down 20 cents. You still know what the value of the property is without having to do any legworks of going to the stock. Like a real estate property, you don't have to go into the home and look at the property. Everything is under your fingertips, and there's nothing that you have to do specifically to make sure that the stock goes up. It's just all online, and you get to see the news and make sure if you made profit or losses on your fingertip. Another pro about stocks is that you get to trade every day. You get to make profit in your own terms. You get to trade, you get to sell whenever you want, and you can make profit doing that. Not like real estate. Real estate, you have a large reserve of cash into one property, and you're letting that property grow annually by itself. But with stocks, you get to put money into a stock, right? If you get a profit, then you can take it out and then you can reinvest it into something else. And you get to hip hop into a lot of stocks without having a lot of reserve of cash held up into one specific stock. Now, with that being said, let's talk about the cons of stocks. The first con that I'm gonna talk about is not being able to control the future of your stocks. I don't mean that you're not able to see the gains of your stocks, but you do not have tangible control over the stocks. You do not have control over if the stocks will gain money or lose money. It's out of your control. Unlike real estate, when you see something going on in your property and you fix it, or you add another bedroom, another bathroom, remodel, kitchen, bathroom, put LVT flooring, you know exactly what you're doing to appreciate the value of the home. But with stocks, you don't have the possibility to add something and then make appreciated value of the stocks. That's just something that you cannot do unless you're like Elon Musk and have control over the whole media platform and tweet out some type of stock and increase 80% value. It's not possible. You do not have control over the stock, the company does. They make the decisions of the stock prices and what they're gonna do for the future of the stocks. You don't. So it's sort of like a blind eye investment because you don't get to see what's gonna happen in the future, what's gonna happen. And the only thing you can pray for is that it goes up and you see news and really cash out when you know it's gonna go out or bad. Like I said, it is a little bit more risky. Another con about stocks is that it's more volatile than real estate. With real estate, you guys see an average 7 to 8% annually rate of return, which means that every single year, home prices will go up 7 to 8%. But with stocks, you don't know that. If you're gonna go into something like penny stocks or stocks that are more volatile like cryptocurrency, those are things that are out of your control. It can go up one day and then it can crash to like negative 100% the next day or the next 30 minutes. You just don't know. There's a lot of risk involved with those. But if you're gonna invest in stocks, I recommend you to invest in dividend stocks or in big, large companies where your money is gonna be safe and you won't lose a ton of your assets immediately. Without knowing anything about the stock market, I recommend you start off with dividend stocks where you'll make a dividend every quarterly, annually, bi-weekly, whenever the stocks tell you they'll give you a dividend, and invest in something like that where you can make cash flow with stocks. And the last con that I want to talk to you about stocks specifically is that there is no tax advantages. When you have a stock and when you sell and you make capital gains on a stock, you still have to pay tax. There's no way you can get away with taxes with stocks. There's a long-term tax that you have to pay and short-term tax. Long-term tax is if you hold it up for 1 year or more. I think you're looking at around 10% tax rate per the profit you made. With something that you do short term, let's say you buy it today and you sell it tomorrow, I think you're looking at around 20% tax rates. And so there's no way you can get away from taxes, and that goes onto your income statements because you did make profit somehow. And so with that being said, those are the 3 pros and cons of stocks. Now let's talk about what I would do if I was in your shoes personally. If you're just getting started with investing, you just got a job and you want to invest some type of money, I would recommend doing stocks first because like I told you guys, it's hard to get into the game of real estate without at least 2 years of tax income returns and a lot of qualifications to get you started in the real estate market. So what I would do is start stocks first, right? Buy dividend stocks where you're gonna make dividends, and obviously invest in stuff that will increase long term. So maybe opening up a Roth IRA and buying stocks that are long-term gain stocks for you for the future and when you do retire. And that's a great way to get started investing. Now, if you have the means and the cash and all the qualifications for you to get started in real estate, you should go for real estate because like I said, if you put that money into a savings account, you're gonna be losing money. So Why not make something that will give you good cash flow every single month without having to work too much? You don't have to work a 9-to-5 job to make your income. You can have your property give you good cash flow for you investing money. For a long-term gain, the best thing you should do, now this is my personal opinion, there's a lot of people who made money from stocks, a lot of people who made money from real estate, a lot of people just making money in general doing whatever they're good at. But what I recommend is for long-term gain is real estate. Real estate is not going anywhere and it will just appreciate in value every single year long-term. With whatever's happening, real estate will always just go up, and it's just a safe route where you know that it's tangible and you know what you can fix, appreciate, and value. There's so many creative things you can do with real estate.
Unlike stocks where you have to buy and sell at a certain time, there's just a lot of headaches involved with stocks, I believe, in my own personal thought.
Unlike real estate where you know that you have a tangible place where someone can stay or somebody can live. And so that's why I recommend, if you're looking for long-term gain and you have the means, start real estate. If not, you should invest in stocks as a way of starting to invest and start making money for your future. Hopefully you guys like this video. This video was pretty long, I'm pretty sure. But if you guys like this informative, helpful video, make sure you guys follow and subscribe me, because I do make an effort to make these videos for you guys. Hopefully you guys enjoyed it. Leave it in the comments if you guys liked what I said. But with that being said, also make sure you guys follow me on Instagram and TikTok. I'll see you guys in the next video, and peace.